Money day, guys and girls. I hope you lot are blessed. Welcome back to the YouTube channel. It's your boy Bigger Vel. You are here learning with Vel, and today, guys, I wanted to give you guys just a slow but sure breakdown on how the markets have moved crazy over the last few days. Now, first things first, if we head over to the economic calendar, we're going to go on to investing.com, which is the website that I recommend. We can see here we did have PPI. We also had the FOMC and the Federal Reserve interest rate decision. Now, yesterday was a blockbuster. Okay, and in light of the news that we saw yesterday, okay, the forecast is that the rate would remain the same for the interest rate, which it did. But, okay, with also inflation and with the chairman announcing that inflation would decrease, this did send, okay, let's have a look at the DXY quickly. This did send the DXY down further into the abyss. Now, you can see here, guys, I've got a little note, an educational note for you guys, which is if the DXY goes down, then that would mean Euro USD would go up, GBP USD, AUD USD, XAUUSD would all go up, okay? Vice versa, if the DXY goes up, then that would mean that Euro USD would go down, and it means the USD base pairs would also go up. Okay, now I've been waiting for the dollar to continue its bearish momentum for quite some time, and we can see over the last 3 days we have now come back into the bull section. We've come back into the bear section, and now we cannot wait to see a price target. And I've had quite a few of you reach out to me and ask me what I think of the dollar, where I think it's going to go. Well, the next target for me, oh, that's a white line. That can't be white, bro. The next target for me is going to be 101.6. If we can reach that handle, I will be expecting a pullback, something along the lines of this price coming down, pulling back up, coming down lower. But look, guys, we've now just approached the end of the year, so I think the most exciting part of the year is done in terms of what we're seeing on the charts, and I think now it just might be pure price action that plays out. I don't think there's going to be any major news events that's going to take place that could really cause a stir in the markets. We did have the UK Bank of England interest rate, which also remained the same. We have also got taking place in just under an hour the European interest rate, and then we've got initial jobless claims, which will take place for the dollar. So we've got an action-packed week, as I said, guys. We also had the Swiss franc interest rate. They remained the same. Now, look, because one has remained the same, it's most likely that the rest of them will do the same as well. So here's what I'm looking at on the charts, and this is just an educational tip on how to trade the news. Whenever there is news coming out, I'm going to give you an example of gold. Whenever you've got a news event coming out, guys, the easiest thing or the most simplest thing that you guys have to do, and this kind of goes back to one of our first videos that I done on my channel, is finding the areas of liquidity. Now, to find the areas of liquidity, we need to find, ladies and gentlemen, the equal highs and the equal lows. We have one equal high in here. We've got a second one here. We've got a third one here. We've got a fourth one here, right? Now, this was, of course, Tuesday heading into Wednesday. And then, of course, Wednesday night is when we had this massive spike, okay? So, essentially, we've had 1, 2, 3 to the fault. Snoop Doggy Dogg and Warren G at your dough, okay? We've had 4 equal highs. And every low that the market made, okay, if we drag this across, every low the market made, it came for and it took it. Every low the market made, it came for it and took it. We had one low here, the second here, the third here, the fourth here. So by the time we get to this area here where price is now hovering around our institutional level, because price has taken out all of the immediate lows, and we can actually backdate these lows back to understanding that on the left-hand side, if I change the color here, on the left-hand side with all of the blue lines I'm about to draw, we had 1, 2, 3, 4, that's a long one, 5, 6, 7 inside of here, 8 here, okay? We had 8 equal lows. Now, of course, some of you would say, well, Vel, this isn't an equal low because price has come down. This isn't an equal low because price has now come down. And you're absolutely right. Every one of these equal lows I've just drawn out, apart from these ones that are still highlighted, have all been taken out. okay, these ones inside of this area, all the liquidity is gone. Meaning that when price pushed up and made all the highs, when it came down, it was targeting the lows. Why? Because beneath these lows are where people place their stop losses. Meaning beneath these lows is where the money is. So why I'm saying this to you guys is because I want you to understand that when we came to this situation, when price coming down, taking out these equal lows and now stopping, okay, I've mentioned this before, but I'll mention it again for this video. Whenever price, spell check, whenever price stops making an equal low or an equal high, this is a major indication for a shift in the market. Okay, whenever price stops making an equal low or an equal high, this is an indication, guys, that a major shift is about to take place in the market. Why am I telling you this? Because the telltale sign, ladies and gentlemen, is that when we stopped seeing an equal low, which was by this low making a new low, but then this high taking out the previous high, that was an indication now that, okay, because price has come down with this wick here, let me zoom in so you guys can see this. Because price came down with this wick and it actually just played into this candle and didn't show any signs of price coming back down towards this area, this, amongst a few different things, okay, gave us an indication that price was not making a new low. Okay, we had the lower high here, lower low, lower high, and then the lower low, and then the lower high. Now, this is not a lower high unless price comes down to making the lower low, which it doesn't. So we already get an indication from there. But I want to take you guys away from the technical side of things, and I want to bring you guys attention to the economical calendar. And I want to let you guys know, when you have major news events occurring like this, we had the interest rate, crude oil inventories check. So around 11 p.m., okay, you had the interest rate being released, right? So when you're on the charts now, guys, what I want you guys to do when you're having a look at this, okay, is I want you guys to pay attention to the fact that wherever the money is, price is going to go, okay? Because I already showed you that by understanding that we had more equal lows here on the left-hand side, which is the reason why price came down for it. So because there's more money above, there's more obvious money above, maybe more attainable money above, that is the reason why the market is going there, okay? The market is going to go where the majority of people's stop losses are. If the majority of people's stop losses are in this cluster here, that is where the market is going. If the market can see that there is $100 million worth of stop losses here, and there's 50 million stop losses here, and there's 200 million stop losses at the top here, the market is going up for the 200 million and taking everything along the way. So you have to understand that in the incentive that the market does in terms of placing a thought process in your brain is it provides you with these equal highs where you have 2 points in the market that match equally, and it makes you believe that this area is safe. It's a safe space for you to place your stop loss. These are the exact same areas that the market's using for you to put your money in those areas so that they can take it. And of course, when they push up and they take your stop losses, they usually do it in a manner which is so quick that you don't get a chance to pull out of that trade. So I don't want to keep this video, I don't want to go on too long. I want to keep this nice and short and sweet. And I want to tell you guys, whenever there is news coming up, just like now, we've got the today we've got the European interest rate releasing in just under an hour. What I would be doing is I'd have a look at some of the European pairs. Let's have a look at, let's say Euro AUD, Euro AUD, as I like to call it. And very simply, guys, I mean, look, this was a magnificent trade I sent out, by the way, guys. A beautiful swing trade here. You can see, sent this trade out a couple of weeks ago, Wednesday, the 15th of November, almost a month to this date right now. Today is the 14th of December, right? And we can see from this perfect execution, prices continued falling. And actually, prices just now met my first take profit level. Now, what am I talking about when it comes to Euro AUD? Well, what I'm talking about is because we have news taking place, okay, in under an hour, we want to highlight where the money is. Is there more money above or is there more money below? Now, to understand if there's more money above or below, the quickest thing you guys can always do whenever you're looking at equal highs and equal lows, is if price has been moving down, then that tells you straight away all of the equal lows from up here to down here have been taken out. How do I know that? Because price started up here and it's finished down here. So any low that's above this low point, they're no longer valid, right? However, because price has been coming down, that means it's been making a lot of lower highs. So it's highly probable that a lot of the lower highs will still be valid. Now, in this instance, this lower high is not valid because price came up here, okay? But for the most part, because price ends up below and it started above, you're always going to have more equal highs available than you are equal lows. So naturally, there is going to be a reason for the market to pull back because there's liquidity above. But what you want to do, guys, is you do want to make sure that you look on the chart, you look to the left, you see if there's any previous areas of liquidity that hasn't been touched, and you look at how long they haven't been touched for, okay? The last time price was this low was back in July, okay, 6 months ago. And of course, when we look at price back then till now, this was in the summer, we can now understand when price is heading down that these are targets that price can potentially reach for the simple fact it hasn't been there in so long, which means there could be a lot of interest beneath this area. And the interest in this instance does mean money. So as we see here at equal low, we can see there's some more lows beneath here, but these lows aren't really as big as this one here. And that's the reason why this low is highlighted. I know this low is a lot lower than this one, but if you think about it from a retail trader's perspective, they're either placing their stop losses beneath this low or beneath this low because price in their eyes has not gone there in quite some time, which is true. So with that being said, we can see the line actually of where the market is. If I zoom out to show you guys, we can see the market has come down. It has taken out that low. Okay, so this low now has been taken out. So we can expect to see a pullback, guys. If we go down into the smaller time frames, then of course we're going to see much more equal highs, equal lows, and that is going to help us understand which direction the market is going to go in, because the market is only interested in following the money. So guys, I want to tell you guys, if you're watching this video on YouTube, make sure you smash the like button. We're not done here. We are only just 3/4 through, but I want to stop you guys and say, look, I appreciate the feedback you guys have been giving me on my videos. I've just recently purchased a villa with my business partner, so I've just really had to put the YouTube stuff to the side. So I'm sorry I haven't been consistent. Once I get the Wi-Fi set up in my new home, I will be, of course, providing you guys with much more content. So I really do appreciate the comments, the love. I appreciate you guys sharing my videos, and I really hope that what I'm doing can actually help you guys change your trading game, because when it comes to trading, guys, this is one of the most fruitful industries that, providing you give it enough time to learn what you're doing, this can really pay you for the rest of your life. And 8 years ago when I got into trading, I didn't know if I would be where I am right now, but I did know that if I could learn this skill set and truly understand the importance of it, that this could actually stick with me for the rest of my life. And, for some of you who are watching this video, maybe working a 9 to 5 and you're trading at the same time, can't really see a way out because you're missing a lot of your trades, bro, sis, I was there trying to trade at work, trying to become more profitable than my salary so that I could leave my job. And essentially I took the wrong route. I left my job and then I put all the pressure on myself of needing to trade. But, once I was in it, I was really in it. So I just want to give a few words of encouragement, words of advice to say, look, if you're not where you want to be right now, don't focus on where you are, focus on where you're going. So with that being said, I'm just going to round this up with the US 30 outcome. Because US 30 is my baby. Okay, this is my favorite pair. For those of you who know me, US 30 is a pair that I absolutely demolish. Now, what's really interesting about US 30 is it's made a new all-time high. This all-time high, ladies and gentlemen, is something that has been, it's unseen of, it's unheard. Okay, it's unheard because of the times that we're living in. But I need you guys to understand something. There is a lot of manipulation taking place on the markets right now. That manipulation is not only influencing the commodities sector, but it's also influencing the equities market. And what we're seeing is risk right now has never been so more valid. Risk has never been as valuable as it is today, because the stock market represents risk. So we have to think about things from two different perspectives here. One perspective is surely when the economy is performing poorly, commodities will tend to do very well as investors will fly towards them to protect their assets, which is true. But the second thing is that when it comes to the equities market, this is usually seen as a representation of the economy. So if the stock market is low, then the economy seems to always be looking like it's on the verges of having a recession. Hence why, if you guys remember, when the market had been low 3 months consecutively, there was many talks about the markets being in a recession. So we have to understand that there is also a lot of manipulation there, because if the markets don't take it, if the markets, look, this is my personal opinion. If the markets push higher, then that shows quote unquote strength, which is the reason why investors will continue to invest into certain projects, right? But when the markets don't seem strong, then essentially what happens is people take their money out of these assets, and that's never good for business. So, as much as the Fed continuously pump money into their economy, they also pump money into these companies. If you look further into a lot of these companies listed on the Dow Jones, you'll see they get a lot of investment from governments, a lot of funding, guys, a lot of funding. So at the moment, we can't really do anything with US30. This candle is just insane, guys. It's absolutely insane. Of course, we do know that this has been a buyer's market for quite some time. We caught a pullback inside of here. We haven't had a new all-time high. So now that we have had this high, we can, of course, wait for the pullback. I think we're done for the year when it comes to looking at the indices. If I'm honest with you, it's 11 days before Christmas. I wouldn't really try to get into the markets, going in towards next week based on the volume that I'm seeing with US30. I can't see this, crash. I can't see this coming, crashing back down. If it did crash back down, then I would say there's a lot more volume in the markets than I would have expected this time of year. But I think what just happened yesterday is we really saw the final push for the year. And right now we're probably just going to formulate some type of structure around here. The formation has been bullish. We have had the highs taken out. But guys, look, as traders who believe in market structure, we have to wait for a pullback. So there is absolutely nothing we can do apart from just sit tight. And I would say enjoy the ride. But if you're not in this, there's nothing to enjoy. But sit tight, make some notes, do some back testing, and just be ready for the next move, guys. Shout out to a lot of you who are inside of our Discord channels. Shout out to a lot of you guys who have been taking advantage of our prop firm, which is APG, Accelerate Prop Group. Accelerated Prop Group is here to stay, guys. We've actually just paid out over $50,000 to individuals that have recently, over the past 2 weeks, been funded and have got their payout. So congratulations to a lot of you. I'm not going to, speak on your names. Maybe you won't want me to, but I just want to say a massive congratulations. If you guys are here, I really want you to remember, it's not where you go, it's not where you are, it's where you're going. So guys, thanks again for tuning in. Sorry for the absence. I'll be back a lot sooner on the rebound. Always remember, guys, that every day is money day. Peace.